Right, good afternoon then, folks, as we head into today's US session on Wednesday, the 28th of June. We'll start with the headlines and flick across the headlines where we do not see much fresh headlines in order to drive that price action in the US dollar that we have seen over the course of the European session. Some pretty clear upside across the board on the US dollar, which we'll come around to in a minute. But in terms of the headlines, we spoke about Australia earlier on, we spoke about Japan earlier on. All we've really got to go off is investors or traders awaiting Jerome Powell's speech, not just Jerome Powell's speech. We'll get around to that in a second at 2:30. But apart from that, you can see not a lot of fresh headlines in the way of headlines to drive price action. We spoke about a couple of things earlier on, but not really too much going on over the course of today's European session. We'll flick across to the currency and intermarket monitors. We can see across here we've got US equity futures down slightly. We've got European stock indexes higher, which don't really go in line with those US equity futures. But Asia Pacific equity futures lower. We can see commodities lower. We can see bond yields lower, and also the US dollar higher, which is clear risk off trading. We then come to the Australian dollar, Kiwi dollar, which have had some contributing factors to that downside earlier, which we spoke about a little bit earlier. But again, that goes in line with risk sentiment. We can see the Japanese yen higher, the Swiss franc higher, and really what we are looking at today is a bit of negativity in markets, potentially some profit taking in the lead up to these speeches that we've got a little bit later on this afternoon. But that's sort of where we are at in terms of trade today. In terms of the calendar today, we've got this out on the agenda. This 2:30, these speeches from the ECB President Lagarde, Bank of Japan's Governor Ueda, Bank of England's Governor Bailey, and the Fed's Chair Jerome Powell. Now they're going to have a group discussion or a panel discussion. The main central bankers at 2:30, which markets will wait in anticipation for to see what they have to say. Now we have had the Bank of England's Governor Jerome Bailey. Obviously, we had the Bank of England out last week, which hiked interest rates by 50 basis points above the 25 basis points that markets had anticipated, and he's likely to reiterate that hawkish stance over the course of today. It'd be pointless for him to push back on that after the measures that they took last week. Now, I was reading a report earlier on. One of the investment banks was suggesting, in terms of interest rate hikes. Obviously, we've had some pretty clear sterling strength over recent months, some pretty aggressive sterling strength over recent months, and there is currently a 1 in 5 chance of a terminal rate of 6.5% when it comes to the Bank of England's interest rate. Markets currently pricing in a terminal rate of 6.25% come year end, which does suggest a further 125 basis points worth of hikes come year end. Now, is that likely to happen? A lot of investment banks think possibly not. Once inflation starts to fall off in the second half of this year, once growth starts to slow, maybe there's less of a need for it once that happens. But with 125 basis points worth of hikes priced into year end, a lot of investment banks seem to think that we may get 75 basis points up until year end, which would mean 50 basis points worth of hikes need to be chalked off. So Bank of England's governor likely to reiterate his hawkish stance, but once you read between the lines, do I really think we'll get 125 basis points worth of hike per year end? Possibly not. I personally don't think so, but we'll have to see what he says for himself at 2:30. Jerome Powell also likely to reiterate this hawkish stance, suggesting that we are likely to see ongoing interest rate hikes. Markets predicting, or them, central bank predicting themselves, a further 50 basis points into year end, and we're probably likely to see a continuation of that sort of chat once we get around to 2:30. The Bank of Japan's Governor Ueda, we may get some further updates on him, on how the central bank feel about interest rates going forward, or about monetary policy going forward, and do they think they may change? You'd have to imagine he suggests probably not, but what we will look out for is some intervention around the Japanese yen as we are approaching that 145 round number that we have been speaking about over the last few days and weeks. You can see 145, we are now up at 145.50, so we're only 50 pips away from 145, which is the first port of call for intervention. Second port of call is that 150 round number up here, which we are obviously a substantial bit away from right now, but that 145 is in focus in the lead up to this. Do we get a pop higher up to 145 over the course of today? Do the central bank decide to intervene tomorrow morning? We will have to see what they think over the course of US trading this afternoon, which obviously isn't too far away, 20 minutes. So we'll hope to see what happens at 2:30 today. But apart from that, you've had clear US dollar strength across the board. You can see Aussie and Kiwi up here continuing those moves to the downside that we've looked at. Euro and sterling, well, sterling's the main culprit of this US dollar strength. Massive sterling downside in the lead up to Andrew Bailey at 2:30. So no clear fundamental driver, but maybe some pricing out of those interest rate hikes that we have alluded to over the course of this video. You can see dollar Swiss higher, dollar CAD higher, dollar CAD higher likely to be under pressure the further lower oil goes. Dollar yen continues to grind higher, dollar index higher. Not too much higher due to the fact that euro has managed to hold firm, but equity markets have not been replicating those US dollar moves. You can see the S&P, the Dow, the Nasdaq and the Russell all holding firm. Slight bit of upside on the DAX, upside in the FTSE, which is kind of out of line considering the central bank's talk over the last week or two. The Nikkei higher, obviously no surprise due to the ongoing situation where the Bank of Japan are not altering their monetary policy. But US yields continue to be flat, S&P flat as you can see. Oil continues to grind lower, has had a touch off this 67 round number that has held firm on a number of occasions. You can see back here, back at the end of May, back at the middle of June, and now at the end of June, we're back at this 67 round number. Failed to sustain much movement below it back here. If we flick it back to a daily chart and have a look at this, this 67 round number has proved to cap price. You can see a failure to break below it here, start of May, failure to sustain any movement below it back at the middle of March. And as we are getting lower highs each time we touch off this 67 round number, you'd have to imagine that folds at some point in the future, which should continue this move higher in dollar CAD. Plus, you get the inflation figures yesterday out of Canada proved that showed a slowdown on inflation, miss on consensus. Couple that with some potential for lower oil prices. If you can get through that 67 round number, means you've got to keep an eye on dollar CAD going forward. But all eyes will be on that panel at 2:30 today. Do we get any information out of it that helps to drive price action? We'll have to wait, obviously, a little bit till we get them out. But keep an eye on that at 2:30, and we'll see what they have to say for themselves in a few minutes.